What are some of the best questions you can ask a lender or discuss with them, or they should be discussing with you when you're getting started in the pre-qualification or pre-approval process? The reason why these are really just so important is that they are the foundational information pieces that are just crucial to making that first step into the home buying process. If your lender is not really discussing these with you, or they're not going over these details, then I don't really believe you're getting the correct information of making the best decision of what's right for you. Many times people go shopping and they just want to know what somebody's interest rate is. Not to say that interest rates are not crucially important, but there's many factors to that, so there's more to find out there. Now, you want to watch to the end so we can cover all these blocks. There's three main areas that we're going to kind of go over that will really help you break this down and help you with that fact-finding journey. Okay, this first section that I always start with when I'm discussing with clients, it's kind of in two pieces, but they go hand in hand, and it's the payment and the budget. The payment is where you live every month. I'm a big believer that you live in the monthly mortgage payment and not in the amount financed. And how that kind of pertains to your budget is that if maybe you've never owned a home before and you're renting, or you bought a home many years ago and interest rates were lower, home prices were lower, and let's say your monthly housing payment's $1,400 or $1,600, but the area that you're looking in at the price points and the down payment that you want to do is going to equate to a housing payment of $2,400 or $2,800. Does that fit your budget? Is that in a comfort zone that you feel like you can handle when it comes down to that mortgage payment? Has something changed? Maybe you've got newly married, or you have a significant other and there's additional wage earner or additional income coming into the house. Maybe you've had a promotion at work or you've been living below your means and you've been saving for this day because you know that's coming. Where does that fit for you? Again, living in that payment month to month, that's what you write out to the mortgage company, and is that fit within that budget that you feel comfortable with? When we look at that budget, that might help us make sure that we're backing into the best purchase prices based on the down payments that you want to do to make sure we're looking at the right price point. So what's in a payment? When we think about a mortgage payment, it has many facets to it. So the main terminology that we use is PITI, which stands for principal and interest, taxes and insurance. So for example, let's say you borrowed $400,000 at a set interest rate on a 30-year fixed term. Well, you have a principal and interest payment. That's the loan portion that goes in. But you would most likely have your property taxes included in your monthly payment and a monthly portion for your homeowner's insurance. This is what's included in what they call as an escrow account. So every month they take a little portion to taxes and insurance, and it's put into this escrow account. And so when the property taxes come due or the homeowner's insurance comes due, these are automatically going to get paid out of that escrow account, so you don't have a large property tax bill or have a large insurance bill. Now, let's say you put less than 20% down. Now you're going to have something called mortgage insurance, most likely. So that's going to be addition. If you're going to buy in an area that is in a homeowners association or an HOA, there will be HOA dues. Now, HOA dues are never included in your mortgage payment, but it's part of that budget that you want to make sure that you're budgeting for. Homeowners association dues could be paid monthly, quarterly, or semi-annually. And what's included in that? In some areas, with some properties, the homeowners association may cover some of your insurance. Does that impact a lower insurance policy requirement for you? Or does it cover anything else amenity-wise for the house for utilities? Another piece to consider is what options are available in the market when it kind of comes down to this payment in this budget. Many people go shopping, and I hear this all the time, is what's your rate? I've got to have the lowest interest rate because that's what I equate to having the lowest payment. Now, I'm never going to say that interest rates are not extremely impactful to monthly payment, but what's the cost involved with that? And many people aren't educated that there are several ways to maybe negotiate those out in your sales contracts to have someone else pay these for you, or there may be some other options to help you with lower monthly payments to start off with as you get going. Making sure you're well educated is just a good place to start when it comes down to payment and budget. Okay, on this next section, we're going to go over what they call the debt to income ratio. Huge piece to the qualification process when we're going out, we're getting pre-approved or pre-qualified for a home loan. Credit scores are really impactful to that pre-approval process. Just as important, if not more so, is the debt to income ratios. Knowing what your numbers are when you're starting this process or going through this process is going to be really impactful. It's going to help you determine whether, if you're trying to do this mortgage or get pre-approved on your own, do you satisfy those numbers? We have a lot of scenarios where maybe there's a significant other or a spouse that do they need to come on to the loan to help you qualify because of that debt to income ratio? Are we able to use that spouse's income? We've had scenarios where we have to take in co-signers because the spouse or their significant other maybe had an absence from work and they're just coming back to work, or maybe they're only working part-time. Or maybe they're newly self-employed and it's just income that we technically cannot recognize. Is that the situation? Because that's going to be impactful to that debt to income ratio and that next building block of what we need to do to move forward to make sure that we have a clean approval. So what is a debt to income ratio and how is it broken down? Well, it's really kind of broken down into two parts. We're going to call the first one the front ratio and the second one the back ratio. So the front ratio is going to take that proposed house payment, what we talked about. We're going to look at the principal and interest. We're going to look at the property taxes, the homeowner's insurance. Do you have mortgage insurance? Is there a homeowners association? And we build that all into a monthly scale. So that's our proposed house payment. And we divide that by your gross monthly income. So that kind of gives us that first section. Now the second section is that back ratio. It's going to take that first proposed house payment again, and it's going to add to it our minimum monthly debts. It's going to add all that together. So what's included on a minimum monthly debt? Let's say, there's going to be mainly items that come off of your credit report. They would be items like an auto payment or car payment. Maybe you have credit cards. Now, credit cards, we don't look at the balances. We look at the minimum payment that is actually reported to the credit report, and that's what we would go off of. Other installment debts that you have, which an installment debt is just you borrow it once and you have a monthly payment until it's done. And student loans. This is a question that we get quite often is that, well, I have student loans, but I'm not making any payments on that. So you should have $0 for that. Well, I don't disagree that you don't have to pay that now, but if you're looking at a 30-year fixed approval, the lender is going to assume that those payments are going to come into play. So if they're not showing a payment, then the lending requirements will come up with their own calculation for a minimum payment to add to that. Now, some items that we don't look at, we don't look at like, your car insurance or utility bills, health insurance. In many instances, except for maybe a VA loan, they don't take into consideration what you pay if you are a W-2 employee, what you pay in federal income tax, state income tax, Social Security income tax, if you're paying into a 401k or things of that nature. So what you want to do is you want to make sure that these items are kind of built in for that qualifying piece, but it's also going to come back to that first section again with that budget. Does it all kind of fit with where my budget is and what I feel comfortable with? There's instances where we can get people qualified on paper for a monthly payment that they would be approved for, but it doesn't fit that budget. It doesn't fit that comfort zone. In this last section, we're going to cover a piece that I believe is truly missed by many people, and they don't get a good enough knowledge base on it. And it really kind of comes down to the cost or the closing cost on a loan transaction. What are these costs? Who's paying these costs? And what kind of other variables are in there that I have control of or that I don't have control over? So when we think about closing costs, what are closing costs? They're the fees that we have to pay for all these other people that are involved in your transaction. There's several parties that are involved. I as the lender, you have title companies, you're going to have an appraiser, you're going to have property taxes, you're going to have homeowners insurance. You may have a recording fee, you may have a tax service fee, there could be transfer taxes involved, homeowners associations. There's all these little different variables that can come into play that all have their own cost associated with those. So how impactful is that to your bottom line? The next piece is that people really don't understand, especially in today's market conditions, that these may be negotiable to be paid by a seller. They can be paid by the real estate agent, and they can be paid by the lender. These are three parties that can technically contribute towards these types of costs that are associated to help you lower what your out-of-pockets are, because it's very important to understand that if I have a down payment amount that I understand, let's say you're going to look at something at $400,000 and I'm only going to put 3% down. Well, then my down payment's $12,000, but you may have another $8,000, $9,000, $10,000 worth of additional cost that you weren't budgeting for. So where do these come from? Who has to pay these? Points is where we'll kind of finish with this as well. I kind of alluded to it in the beginning. When people are out shopping for the interest rate, they're just looking for the lowest rate. Points are associated with rates. A discount point is supposed to be used to buy down your rate. So someone may quote you a very low or below market rate, but there may be several points in there that they have not disclosed or discussed with you. This is information you want to know. Does that fit your budget? Is it something you can negotiate out for the seller to pay? Is there a permanent buy down option to get the lowest interest rate for the duration of that loan? Is there a temporary buy down option that may get me several points below market for a shorter period of time to help me budget as I'm moving forward? These are great foundational pieces when it kind of comes down to getting that foundational information in place, knowing payments and budget. And how does that impact you? And are you in your comfort zone? Going through your debt to income ratios, making sure that you understand that where are you at in that credit and debt to income ratio from a qualifying standpoint, and closing costs. What do I need to prepare for? Do I need to negotiate some things out? Does my agent know what we need to really look for? Great foundational pieces that you should be discussing with your lender. Let us know how else we can help. Make sure you click on some of our other links below as we get into more information about the home buying process.